Good morning, good evening, guys, wherever you are in the world. It is our trades back here with another video. Want to thank you for joining me, guys. And in this video, we are going to cover the topic of how to incorporate ICT from my perspective with other concepts. Guys, if you like this content, if you enjoy content about the futures markets, please make sure to like, comment, and subscribe. Okay, guys, so in this video, it shouldn't be too much of a long one. Hopefully I can keep your attention for as long as possible. The idea is, all right, you've learned a little bit about ICT's concepts, but you've also got other systems. How can you incorporate ICT into some other common trading systems? Well, from my perspective, guys, there's a few different ways to do that, and I want to talk about here what I have drawn on the screen. First, I want to talk about ICT's concepts of time. Now, before I get into the nuts and bolts, guys, I do want to say that ICT did not necessarily come up with all of these concepts. The reasons why I'm calling these ICT concepts is that's from whom I learned. That is the YouTube personality that I learned some of this stuff from. Obviously, guys, ICT didn't get it all from himself either. These are modified concepts that come from earlier. For example, the turtle soup comes from Linda Raschke. So I'm calling it ICT's concepts, but of course, guys, I don't think that ICT owns all of these ideas. Okay, with that being said, the first way that I think that you can incorporate ICT's concepts here on TradingView is simply by setting your time to New York local time. I think that ICT, and I'm going to argue that he has a good point, that the stock market, the stock exchange, the New York Stock Exchange, the biggest stock exchange in the world, is based out of New York. And so I think the best way to set your time zone, I agree with ICT, is to set it to New York local time. That is something that you can immediately incorporate if you are able to change the time zone on your chart. I think that there's a slight advantage to having it set to New York local time. That way you're tracking when the stock market opens and when the stock market closes. Now, of course, guys, we're trading futures, and the futures market continues to trade for, 23 hours, 5 days a week, trades on Sundays as well. The point being, though, is that the majority of the movement and the majority of the news that comes out, guys, is going to be when the stocks are actually trading as well, during the regular trading hours. So, in my opinion, ICT has it right, and there's a slight advantage. I'm not going to say how much of an advantage. I don't know. I do believe that there is a slight advantage to setting your time zone to New York, regardless of the time zone that you are in, so that you are tracking with the New York Stock Exchange. I think that makes a lot of sense. I have found that to generally be a good thing to do. Okay, number two, guys, I want to talk about the incorporating ICT with the volume profile. So there are a lot of people out there that like to use the volume profile. Now, what is the volume profile? On the right-hand side of the chart here, it's otherwise known as a volume by price, and it shows you where the market has been trading in terms of volume, but not by time, as you see here on the bottom, but by price. The idea is that the market likes to put in more volume at some prices, less volume at other prices. This gets into some really sort of nuanced stuff, but basically, guys, the point of control on right now, I have a visible range volume profile. So depending on which volume profile you're using, you might use a session volume profile, or you might use a volume profile like I am, which is a visible range. So you can see that when I change the visible range, the volume profile changes. Generally, guys, I don't find it to be that impactful, but you should know that this is a visible range volume profile. The point of control is where the market has put in the most volume by price. So we look at this red line here. We can see that there was a lot of overlapping trading. So the market, in other words, we're on a 5-minute chart. The market spent a lot of time at that 5,592 3/4. We're here on the MES. And so the idea is that the market, number one, is attracted back to the point of control, because the basic idea being is that is where the market found there to be a fair price, and the market is attracted to that. The other idea is that when the market is around these sort of high volume nodes, so wherever you see these bars are extending out further, the market is likely to spend more time in those prices than when the market is in these low volume nodes. So the idea is that when you go through a low volume node, the market is likely, but not guaranteed, but likely to move more quickly through a low volume node than it is through the point of control or a high volume node. These are known as HVNs and LVNs. The point of control is known as the POC or the POC. And that's where on whatever volume profile you're using, I'm using a visible range volume profile. That is where the most volume by price has been put in for that visible range. So how do you incorporate the volume profile with ICT? And let's go ahead and talk about that, guys. So I'm going to go here on an hourly chart, and I'm going to remove some of the drawings. I'm holding down Control on TradingView to remove multiple drawings at once. If you're using TradingView and you didn't know that, I think that's something interesting, or something that you should know, is that you can hold down Control, select multiple drawings, and just click the little trash can symbol, and they're out. So we're now here on an hourly chart. I think the easiest way to incorporate ICT's concepts with the volume profile is simply by looking and noticing that the low volume nodes, guys, what do they tend to be? Well, they tend to be ICT fair value gaps. And so when you have a low volume node that is also an ICT fair value gap, or it might be a long wick inefficiency, that's one way where you can pretty easily incorporate ICT's concepts with volume profile trading. Now, in addition to that, guys, it's not only the fair value gaps, but notice that where the market has a low volume node, notice that we have wicks here over to the left. The basis of ICT trading, and this is coming from him, are inefficiencies and liquidity. When ICT talks about an inefficiency, what he means is a price point where the market traded through quickly and did not efficiently deliver price. Okay, we've been through that concept. ICT goes through that concept. One way that you can confirm that the market was inefficiently delivered at that price, other than just looking for a long wick, which is the ICT sort of basic visual method, look and see if that also lines up with being a low volume node. So for example, we can see here that we have a low volume node in between about 5,676.25 and 5,660 evens. And we're here on the regular trading hours, guys. Well, notice that that is an ICT long wick, and notice that it's an ICT fair value gap. So the market did not want to spend a lot of time in between about that 5,660 and 5,676 spot 50. What that means in essence is that the price was inefficiently delivered at those price points. Now you can see that visually using the ICT methods, but you can also see it on the volume profile. So guys, if you are seeing a high volume node, a point of control, so just to recap here, if we see a point of control here at 5,644.50, notice all the price action that we have at that price. So visually, the candles are confirming what you're seeing on the volume profile. Conversely, if we're looking at the low volume nodes, look at ICT fair value gap, and then look, the market really didn't spend that much time at that price. So you can see it visually, and you can also see it on the volume profile, which I think is a very useful tool to have. Another item very easily that you can incorporate into other trading systems from ICTs is using the regular trading hours and using the electronic trading hours. So if you're using TradingView, or if you're using another software package that allows you to switch between the electronic trading hours and the regular trading hours, I think that that is something that you can easily incorporate from ICT's concepts and right into another system as well. What are the electronic trading hours and what are the regular trading hours? The electronic trading hours include all of the time that the market has been trading, including from when the market is trading during when the New York Stock Exchange is open, and also when the stock exchange is closed. Because remember, the futures trade 23 hours a day, 5 days a week. The New York Stock Exchange is open from 9:30 New York local time to 1600 4 o'clock New York local time. Okay, so we switch it to the electronic trading hours. Notice that our volume profile looks a little bit different. Notice that our high volume nodes, our low volume nodes are a little bit different, and we also have a lot more price action than we had before. I switched this to the regular trading hours, and now you're only seeing when the stock exchange is open, and our volume profile becomes a little bit different. Now look at where the market, that point of control there at 5,528 here on the visible range. Notice how long the market liked spending at that time. The basic idea behind that is a couple different things. Number one, markets are attracted to trading ranges. You then ask, why are markets attracted to trading ranges? Why does the market like to come back to trading ranges? Well, in essence, the theory or the idea behind that is that's where market participants found that the market was fairly priced. Okay, the market was fairly priced. So when the micro ES here spent a lot of time around that 5,528 or that point of control, traders or market participants found that that was a relatively fair price for quite a bit of time. Notice that after the market made a rally higher, when some uncertainty came back in the market, we're going right back down to where the market previously found that there was a fair price. Another item of ICT's concepts that I think you can pretty easily incorporate into your trading, and let's go on to the electronic trading hours, are runs on liquidity. And again, I'm going to use the volume profile as an example of this. What do I mean by runs on liquidity? According to ICT's theory of price action, the market wants to run on prior highs and run on prior lows because above prior highs and below prior lows, there are pockets, there's lots of resting orders, or in other words, there's lots of liquidity, lots of market interest above prior highs and below prior lows. Now you can very easily incorporate this into a market profile or a volume profile system by looking at where your low volume nodes are, and notice that the market quickly or inefficiently, from ICT's perspective, goes above those prior highs, grabs that liquidity, and then moves lower. It does that once, twice, and then 3 times, and finally the market starts trading quite a bit lower. Well, guys, as you can see, whether you're looking at it from a book map perspective, where there's going to be another trading system, guys, is using something called book map or a heat map, which is going to show you where there's lots of resting orders. Well, notice that there's lots of resting orders above prior highs and below prior lows, which is exactly what ICT says as well. That's where the liquidity is, that's where the market interest is, and that's where the market likes to run to, according to ICT theory. That's not only according to ICT theory, that's according to heat map, book map, and you can also see that those are low volume nodes or inefficiently delivered price by using the volume profile. And so, guys, ICT's concepts don't have to stand alone. I understand that in the past I advocated that you can use ICT as a standalone system, and I do believe that you can use ICT's concepts as a standalone system. But for those of you that are looking for confirmation, or you're already used to using a book map, heat map, or a volume profile system, you can incorporate some of ICT's concepts pretty easily into those. Okay, guys, so with that being said, we've talked about ICT's inefficient price delivery. We've now talked about using ICT's concepts with volume profile or a heat map for runs on liquidity. I've also discussed how you can pretty easily incorporate ICT's concepts by changing your time zone to New York local time and by using the regular trading hours in addition to the electronic trading hours, but switching to the regular trading hours when the New York Stock Exchange is open. Now, guys, I want to talk about incorporating some indicators with your ICT trading system. The number one indicator that I like to use at all times, guys, I really like to have this on my chart, is I like to use the average true range, which is going to show me the average size of a candle for the past 14 periods using an algorithm called the RMA. You don't really need to know what the algorithm is. It's just, hey, this is the market volatility. How does this tie in with ICT's concepts? Well, notice that pretty much the S&P 500 or the MES futures reaches about a 7.8 range, and then it reaches about, we'll say, a 14-point range. And notice that it does this on a regular basis. Well, if I were to show you using the time, using horizontal lines, ICT talks about volume by time, right? Now notice that when the market is during its low volatility periods, that is in fact when the New York Stock Exchange is closed. In other words, your overnight trading. ICT talks about the 24-hour trading cycle. He talks about the 24-hour, what he calls the interbank cycle. I don't know if that's accurate. I'm just saying that he talks about the market starting at midnight New York local time, the next trading day. And guys, notice that that pretty much lines up with your low volatility. And then when you get higher volatility, you're coming into the New York Stock Exchange. These concepts of looking at the market, not only by price, but by time, ICT talks about that a lot. Okay, and you can incorporate that with your average true range as well. Remember that according to ICT, the 24-hour banking cycle starts at midnight New York local time. And you can see that on the 24-hour chart, that's 0000 New York local time. So guys, that's something that ICT talks about as well that I think you can pretty easily incorporate into your system. Finally, I want to talk about some ICT patterns that you can incorporate into any system. The first is going to be the turtle soup pattern. And we saw a great example of this at the top side of the chart, guys. So one of ICT's patterns is a simple rejection of a prior high or a simple rejection of a prior low. We saw that here as well. Linda Raschke, I think, was the one that originally came up with this, but ICT talks about it. And that is, every time that the market makes a new short-term high or it makes a new short-term low, there is a chance that the market is going to reject that high or reject that low and move back in the opposite direction, otherwise known as turtle souping. The classic signs of the market turtle souping is the market making a long wick like it did here at the Monday, the 5th of July at 1100. Okay, that was when the New York Stock Exchange was open. Notice that long wick or inefficient price delivery. Notice that the market came back to redeliver and then rebalance that price delivery. We've talked about redelivery and rebalance on this channel before. And then notice that that's a low volume node as well. Notice that it's a turtle soup pattern. These are using different concepts from different traders, all to reach the same conclusion. Same thing here at 800, which is in the pre-market. Okay, the market opens up at 0930, so an hour and a half before the New York Stock Exchange opened on Friday. Notice that we had a quick dip below prior liquidity, otherwise known as a stop hunt. Stop hunts, liquidity grab, whatever you want to call it, inefficient price delivery. Notice that was a low volume node at the time. The market came in turtle souped, and then we ran and we formed relatively equal highs. What are relatively equal highs according to ICT? A liquidity signature. So guys, all of these things are coming together. So this video has gone on for about 18 minutes, and just to quickly recap, what are some ICT concepts that you can easily incorporate into other trading systems? Setting your time zone to New York local or Eastern Standard Time instead of your local time. Using the electronic trading hours and the regular trading hours. Incorporating ICT's concepts of inefficient price delivery using patterns like the long wick or the fair value gap, and seeing if that aligns with the volume profile with a low volume node. Number 4, the turtle soup pattern, or looking for when the market makes a new high or a new low, rejects that new high or new low, and moves back in the opposite direction. Okay? So guys, these are some basic examples. This video has gone on about 20 minutes now, so that's about long enough. I hope that this has been helpful. There are other ICT patterns like the breaker block, order blocks, that I think go in well with the concept of trading ranges, or, guys, pivot points. Okay, before I end the video, I do want to talk about pivot points. Okay, pivot points. Pivot points standard. And let's get the pivot points out, guys. ICT uses a concept called order blocks, which are very similar to what I would say the classic pivot points are. What are ICT order blocks? Well, guys, you're basically looking when the market is making a move and where it pivoted. That is an ICT order block. So going down to the 30-minute chart, let's see if I can find an example of an ICT order block. Let's go down to the 15-minute chart on the regular trading hours. Okay, guys, so here we can see that there was a classic downtrend. So I'm going to connect these points here and call that a trend line. So we had a trend downwards. I'll connect these points just to make it a little bit cleaner, guys. So we've had a downtrend. Now, where has the market pivoted? Well, guys, notice that the market attempted to rally here on Thursday, the 18th of July at 10:45. The market made a new low and thought about rejecting that new low and turning higher. Instead, the market made another move lower. That is an ICT order block. And if you take the midpoint of that ICT order block, it's very similar to having pivots on your chart. Very similar to having pivot points, which is another trading system. And notice that at the midway point of that is what ICT calls the mean threshold. Now, there's order blocks all over the place. There's no shortage of order blocks, but the simplest example is when the market is trending higher, trending lower. You see these nice little single candles. Very easy to spot order blocks. Okay, so those are some of the examples that I think make a lot of sense. With that being said, guys, that's going to conclude this video of incorporating ICT concepts into other systems. This is probably not going to be my last video on it. Guys, if you like this content, please make sure to like, comment, subscribe, and use the affiliate links in the description box below.